and stocks. What do we have? On the Nifty, we are starting at 22,288. On the Sensex, we are starting at 73,300. It's 87 point higher start on the Nifty. Almost three-digit gain now. Mid-cap index is up 0.5%, 273 on the mid-cap index. And I think you've got the small-cap index, which is also starting about 0.5% higher. So those are indices, but as we've seen, it's been, groups of stocks over the last couple of days which have done well. Yesterday it was capital goods. Before that it was PSUs, metals. So let's get it with stocks. Sonia's got that with her. Sonia.
Well, thanks a lot for that. As you rightly pointed out, it's a good opening for the market, right? Almost 90 points higher now on the index. But I'm going to take it straight to individual stocks. M&M really is the stock on our radar. We heard about the XUV 3XO seeing over 50,000 bookings in 60 minutes. So look at M&M now. Fresh record high, up almost about 1% and really taking it away. 2,300 on M&M. Big move over there. Adani Ports is the other one. Very strong commentary coming in, up almost about 1%. They say that cargo volumes are targeted to reach 1,000 million tons in 2030, and the port's ROC is expected to be over 20%. So just keep that on your radar. Bharti Airtel is the other one. The India business has been very strong, and Rima was telling us that a lot of brokerages have raised their target price on the stock. Kotak has raised its target price to 1,410, so big upside to the current market price here. So keep an eye on Bharti Airtel. IEX is the other one. Overall electricity volumes are up 15.5%. The EBITDA is up 12.5%. And look at the stock charging away now 3.5% higher. Apart from that, there's NCC, which reported a decent set of numbers. The stock is up about 3%. EBITDA went up 18%. Revenues rose 31%. So just keep tracking that one. Then there's LIC Housing Finance. The disbursement growth was pretty good, almost 14%. AUMs have risen 4.5%. So looking good on LIC Housing Finance. Let's move to Dixon Technologies. The headline numbers were a miss, but the mobile business growth has been healthy and the street likes that. 8,200 now on Dixon Tech has been a huge mover lately. So the stock is piling on the gains, up about 2%. Honeywell Auto as well, the EBITDA and margins were above estimates. The margins actually saw almost a 200 basis points rise. But for now, the stock is coming in for some profit taking, so down about 4%. Titagarh Wagons, the EBITDA has gone up almost 26%. Margins above estimates, and the street likes that. 6% higher. More with the management coming up in a bit, so stay tuned for that. Mankind Pharma, the Q4 numbers were better than estimated. Margins higher as well at 24%, so looking good. CMS Info, EBITDA up almost about 9%, revenue growth of almost 25%. Then we take it to some of the numbers that came in post-market hours yesterday. Berger Paints, overall almost 14% volume growth is what Berger Paints saw. So keep an eye out on that. Yesterday's listing, Aadhar Housing, it was a subdued listing, but HNI investors, Akash Bhansali bought almost 45 lakh shares on day one. And as we told you in pre-opening as well, Aadhar Housing is now the cheapest amongst the housing finance stocks. So just look at the move there. Day one was not great, but day two is seeing a big move on the stock. Overall, since it's the fag end of the earnings season, so many stocks coming out with numbers, so we're tracking that. But the main focus area is here. Almost a century now on the Nifty, looking pretty good. And this is the main area to focus on. 1,800 stocks on the advancing side. So clearly, the market breadth is improving, which is a great thing. Back to you.
Well, IT is also doing pretty well today. Pull up the Nifty IT because names like Tech Mahindra, that's up 1.7%, LTI Mindtree, HCL Tech, Wipro, across the board, the large caps are showing you pretty healthy gains. So IT is leading from the front, with the Nifty IT index also showing you a rally of close to about 1% right now. Outside of the index, it's Apollo Tyres which catches your attention. It's a 5.5% gain on Apollo Tyres, and there have been a lot of upgrades coming through on Apollo Tyres. So Nomura has upgraded it to a neutral. They're saying the current valuation does not look very expensive. And the other one is JP Morgan, which has upgraded Apollo Tyres to an overweight and raised the target price to 550 because the company continues to demonstrate its commitment towards balance sheet deleveraging. So Apollo Tyres is a stock which is on fire today. Came out with numbers though 2 days back. On the way down, keep your eye on Redington. The stock has slipped nearly 5%. A disappointing set of numbers. The company's margins have come under pressure. EBITDA margins in the current quarter are at 2%, which compares with 2.2% sequentially and 2.5% a year ago. So Redington, is losing ground. But other than that, it's a pretty good-looking screen, and at least the Nifty is managing to hold on to its gains, and the advanced decline ratio is very strong.
Well, 90 points higher, right? And so this is as good as they come, especially in a market phase that we find ourselves in. I think we've sort of outlined a bulk of the long list of stocks there, which are moving. Aadhar Housing, by the way, is the #1 volume-led gainer across the NSE. So that should tell you something. Yesterday, it started flat, and you had that TBO Tech, which started with a 50% pop. But Aadhar Housing, I mean, 20% CAGR in AUM is what they are kind of expecting. They're one of the largest actually in the space. AUM size is about 20,000, nearly 20,000 crores, and largely lends to the salaried segment. What else? I think we mentioned Apollo Tyres, Titagarh, I think we did mention. IEX is up about 2.5% or so, 150 nearly, and has got very large volumes coming up now. Nagarjuna Construction is up about 5%, it's got large volumes. Oberoi Realty. Look at Sterling Wilson Solar, 3.5% higher on that one. Yesterday, of course, was, I think it's a new high, a new all-time high. So it's 786 now on this one, after yesterday's 5% gain. There is Kirloskar Brothers, which is up 3%, again, strong gains. IIFL Securities had a strong day yesterday. That is up about 4% or so. And there is, I think, Jyoti Laboratories, which is up about 1.6 odd percent as well. So it's overwhelmingly up. 1650 stocks are higher, and you've got some under 400 stocks which are lower at this point in time. On the way down, there is only NLC India with a 4% cut with any volumes. Bandhan Bank maybe is another one which has got volumes. That is down about 2.5 odd percent as well. Sonia?
Just that rural theme we were talking about, right? Yeah. How rural is coming back. In the auto space, it's very apparent because all these stocks, whether it's M&M, Hero MotoCorp, Escorts, all at fresh 52-week highs this morning. Ashok Leyland is also rising quite a bit. So that is one theme that's playing out in its entirety now.
Absolutely. And, that's absolutely true. Autos, of course, have done extremely well. It's been perhaps a sector of the last year or so. Well, let's welcome in our market master of the day. We have Nimesh Chandan, who is joining us. He's here in our studios. Nimesh, good morning. Great to have you with us here. Thanks
good morning.
For coming in. Now, we'll talk about markets broadly and what your view is, but I want to start with the entire industrials segment, capital goods, equipment makers. Yesterday, we saw this big move in names like Thermax and CG Power and what you have. Everything went up, right? Siemens and ABB are up 70%
Absolutely.
This year. As a fund manager, I mean, when you're sort of starting to put fresh money at work, how do you do it? The only thing, as someone was joking yesterday, is they've got to find a stock in that space under 100 PE, and then go with it. Your thoughts, Nimesh?
So as a fund house at Bajaj Finserv AMC, how we look at it is we identify mega trends which can impact economies and businesses over many years. So maybe as a mutual fund, we take the luxury of looking at about 3 to 5 years at least when we are identifying these large trends. Typically what happens in that wave, say for example currently power sector, you see all the components or all the beneficiaries of this trend start doing well. Suddenly there is a good tailwind for them to show better earnings, and for many of these companies, because of operating and financial leverage, if the top line starts jumping up, you see a huge delta on the bottom line. And once the trend catches attention and the idea spreads, you see valuations also moving up. During these phases, it is better not to try to trade in and out in these trending companies. If you find a good replacement which is at a better valuation, you switch. Otherwise, you stick with them. The one thing to watch is whether these companies are beating estimates or they are underperforming there. Typically, a trend matures when you see more and more companies underperforming what the analysts or the investors are estimating from them. So high valuations may not be a reason to just trade out of these companies. Possibly they go through some time correction.
But if you already own it, stay. There's no problem. I mean, great, enjoy. I'm saying as somebody looking to buy, how do you do that? That's the dilemma.
So hunting in these markets for a newer investment, I think a contrarian view is essential. You have to take advantage of this impatience that market is into, right? Any company that is going through a downturn for the last 2-3 years, the market is typically ignoring them. They may be in either the banking sector or say the consumer sector. I think those are the areas to now fish. Within say a longer term theme that we see which is going through a temporary slowdown is chemicals. This is an area where you can actually find good companies at good valuation with a good structural mega trend in place. So hunting in contrarian areas, if you already invested, don't try to trade out or move out just because of valuations in the trending areas.
Okay. Nimesh, hi. Thank you first of all for coming here to the studio and speaking to us. I was going through some of your notes, and a space or a segment that you like is rural consumption, right? You speak about how it seems to have bottomed out, and the fact that we're expecting good monsoons could make for potential for incremental recovery. But which are the pockets there that I can look at? Because there's so much. There are the HUL Daburs of the world, there are tractor makers, there are SUV makers. Where does your preference lie?
Many of these sectors will benefit, but let's say two-wheelers have discounted some part of that recovery already. They've actually performed very well, and even today in the auto sector in our pecking order, we see two-wheelers having a higher single-digit or lower double-digit kind of growth rates, followed by PVs and followed by CVs and tractors. But FMCG as a basket has underperformed for quite some time. Yeah. Valuations have come down, they've taken a time correction. Many of these companies are now seeing margin expansion also because of commodity prices being a little more benign. So if you want to bet on a good recovery with good quality companies with cash flows and good dividends, then FMCG would be the next big thing to look at.
So just a follow up there. So within FMCG, I mean, there are different pockets as well, right? There are the HUL Daburs of the world. There are a couple of the other smaller guys as well. So do you just look for an overarching recovery and then valuation headroom and then pick stocks, or how do you do it?
I think the whole sector is at a lower end of its valuation band, and the premium that they used to enjoy compared to the Nifty or the Sensex has come down substantially. Companies with at least having 25-30% of their business coming from the rural side, I think that's where you start scanning businesses. So you would find certain MNCs which are more urban oriented have already seen good numbers. The rural part will start kicking in from here on.
Okay. So you started off the conversation by saying that you look to identify some mega trends from a 3 to 5 year time horizon. Chemicals is one. The second one appears to be consumer staples. What else have you identified?
We look at mega trends originating from the technology changes, regulatory changes, economic
tell us the
changes,
themes that you like. Where there is a
within, say, the pharma sector, we like a sub-segment called contract research and manufacturing. Both in terms of cost and economics, as well as the regulatory changes going on globally in terms of China Plus One. This is one sector which is underappreciated and benefits a lot. Overall, we like lifestyle consumption, so consumer discretionary. This is again an area which we like for the next 3 to 5 years. Real estate is a very positive trend we are seeing. Typically, it's a 6 to 8 year cycle. We are probably 2-3 years into it, so we still have a long runway to go there. And real estate, as you know, affects a lot of other ancillary industries also in building materials and so on.
So what about defense, right? That's a big mega trend that's been playing out for the last 2 years.
True. We like defense as a mega trend, but now the valuations of many of these companies have reached a level where either the upside is a little lesser than what we are looking for, or we'll have to see some of these companies show execution and then go to the next leg of re-rating for them. Just the order books, I think, have already been priced in.
Nimesh, on chemicals, is this extreme performance, this up and up market, forcing us to look for opportunities? Is it turned? I mean, my question is for chemicals, can you size up and buy and wait for the turn? Or is it iffy? I mean, it may happen, it may not happen. Or is valuation comfort so good that you're okay waiting? I mean, if it doesn't happen next quarter, 2 quarters, it'll happen. What's your sense?
So we look for two important, say, data points before we take a contrarian call. One, we need to be sure that the intrinsic value lies much higher than what the prices are. Second, there should be a trigger in sight. Say within a year, to see the re-rating happen. Why should a cheap stock become expensive? There has to be a trigger. So in chemicals, we find both of these. And so the intrinsic value is much higher. Longer term trends are much higher. If you see globally, for the last 2 quarters, most of the large chemical companies, whether you take FMC, DuPont, any of them, they've been talking about that destocking is at a fag end. we'll probably see sequential improvement in volumes and prices from here on. So that gives us comfort, the commentary, and the value that lies there.
And what kind of names are we talking about? I mean, I don't know if you can name names, but if you can, just for educational purpose, it'll be helpful.
So I'll split between, because chemicals is a wide space.
Sure.
There are many companies that are into specialty chemicals. There are certain discretionary chemicals like dyes and pigments. So
Sure.
first, we are seeing some recovery there in the dyes and pigment segment, and there are a few companies which are beneficiaries.
So Sudarshan Chemicals and things like that. I mean, not maybe others as well.
So you saw globally one of the large majors in dyes and pigments actually declared bankruptcy,
Correct.
and that has led to some of the Indian companies, like you mentioned,
Yeah.
see a benefit of both in price and becoming a larger market share. And there are other companies which you see have done capex in the last 2 years. So they have increased their asset size by double, but are yet to see that trigger come in. So some of those can be areas to look at. Agrochemicals may be an area where there could be some more slowdown before they start recovery.
Okay, one space or one theme that you talk about is the K-shaped recovery that India is going through, right? It may not necessarily be a great thing because it also talks about that huge income divide. But from a stock market angle, how do you play it? Because a lot of these premium products or premium segments, whether it's real estate, whether it's aviation, whether it is SUV, large cars, right? We've seen a lot of it play out in stocks already. So where do you see incremental gains to maximize on this K-shaped recovery theme?
We are probably still at the beginning of this upgrades in consumption. So while we saw K-shape, which means the premium consumption did very well and the bottom of the pyramid did not do well. I think from here on, if rural also recovers, we even see bottom of the pyramid starting to do well. But these bigger trends, which like, SUVs becoming a large part of auto sales or large ticket real estate being part of the total real estate sales, these trends are likely to continue.
Okay.
And picking up companies that give room for their for their customers to upgrade, I think those would be the key beneficiaries. So here, brands, quality, all these things would play a big role. And we are very conscious of some of these companies where they give a line of products where their customers can keep upgrading and spending more with them.
So there are two things working out here, right? One is, of course, India is moving from a low income to a middle income society. And the second is this demographic dividend play that I think is going to mature in about 2040. So to play these two themes, which are the spaces you think where there's maximum potential?
It would be consumer discretionary, and as confidence in income grows, there will be even confidence in leveraging. So finance and consumer. If you see historically, large economies, when they have moved from the stage that we are into a more developed economy or Viksit Bharat, you will see these are the two spaces where good brands and companies with good moats or competitive advantage in their business will start doing better.
Okay, we'll let you go on that one. It was really a pleasure speaking to you, and you should come to the studio more often to chat with us. Thank you. Okay, well, on the market, it's not bad. After the kind of run-up that we've seen in the last couple of days, we are facing a bit of resistance around the 22,300 mark, to be honest. But for now, it's steady state. So not looking too bad. In terms of individual stocks, just a quick mention. Titagarh Rail is really a big mover, 8% higher. And Apollo Tyres, after those upgrades that have come in post the numbers, Apollo Tyres is one stock which is looking pretty good. But let's talk about Berger Paints. For Q4, their EBITDA was impacted. Margins have contracted, while the value sales are impacted by about 5%. Their Q4 volume growth came in at nearly 14%. Let's connect with Abhijit Roy, the MD and CEO of Berger Paints, to discuss their Q4 performance. Abhijit, hi, good morning, and always good speaking to you. This discussion we were having about the recovery in rural consumption, right? Or tier 2 and tier 3 consumption. How much merit is there in that argument? Are you also seeing green shoots? If yes, can you quantify it for us? And this 14% volume growth that you saw for the quarter, is this something that is sustainable in the first half of FY25?
Yeah, so morning, Sonia, and there has been an improvement in the demand in the rural areas, in entire 3, 4 and upcountry towns. As we see it today, this demand is likely to continue. So in the first half, I think we should see sustainable volume growth happening. As we have seen in the fourth quarter and even for the whole year, we are a double-digit volume growth, and that is likely to continue, going forward as well.
So when you say double-digit volume growth, right, is it fair to assume that you'll hold on to this 12-13%, or do you think, given the kind of competition that this space is also seeing, by the end of FY25, is 10-11% something that is a more reasonable ask from your end?
So difficult to say at this stage, Sonia, because as of now, the competition hasn't been, biting us so far, but obviously it will have some impact. Our estimate is that we will still be reasonably sure that, we will still have a double-digit volume growth at the end of the year as well. We have been gaining market share even under, this last year as well, we gained market share overall. And our objective is for the last 2 years, we have gained about 0.7, 0.8%. And that's something which we will continue to do, hopefully, next year, this year as well.
Sir, while your volume growth may be double digit, the value growth has been a lot less. One, because of the price cuts that you took, but also the mix is changing. There was destocking seen in the luxury segment. There is higher growth seen in the low valued, paint segment. So what's happening on that front? And what's the outlook?
You are right, so mix is changing slightly. Of course, the destocking which happened in the luxury products is going to stop because there was an anticipation in the market, and dealers typically, when there is an anticipation for a price increase, they tend to stock up. When they feel that there might be a decrease, they tend to stock down. So that destocking happened in the quarter 4 for luxury products because that's the only category where prices hadn't dropped. All other categories prices had dropped. So the dealers expected the prices to drop in luxury as well, and they were holding on to their purchases to some extent. That's going to come back in quarter 1 and quarter 2. So you will not see the destocking happening this quarter. The second part is the low value and high volume products like admixture, tile adhesives, putty to some extent maybe. Those are growing at a faster pace. That will continue to happen because it's coming on a lower base, so the growth rates are much higher. But that is not a worry because those are also reasonably profitable, so it doesn't matter so much. The volume growth therefore will be on the higher side. This price decrease impact will continue for some more time. So therefore, the volume value gap will be there to some extent.
Mr. Roy, hi, good morning. Good to have you with us here, sir. Prashant this side. Could you tell us for FY25 then, sort of putting all of this together, what is revenue growth going to look like?
So it will be marginally below that double digit, possibly very close to the double digit volume growth number. But below that slightly because of the price deflation which has happened, and right up to December we will have that impact unless there is a price increase happening in between. Logically speaking, there will be a 2 to 3% differential between the volume and the value growth at the end of the year. That's where it will be. And profit growth will still be reasonably good. As we have seen, this year, of course, was very strong at about 24% plus growth. But here it will be similar to the volume growth, possibly. That picture will be more clearer once we move forward a little bit.
So, 9% kind of top line growth is what you're kind of guiding for?
Sort of 8 to 9%, you can say, for the year.
8 to 9% revenue growth. What about margins, Mr. Roy? Let me just sort of tie that in as well. Will that be around FY24 levels, 15.5%, or will it be
similar
slightly
levels? We have always said that it will hover between the 15 to the 17% range, and that's where we will remain for sure.
So around, but it should be at the lower end, right? I mean, around 15%.
No, not necessarily. It can be, more towards, the middle of the, equation, 15 to 17. So 16% is more or less, where we will be possibly.
Okay, I want to talk a little more about any changes on the ground yet with Birla Opus coming on board. I know you said that competition has not, affected you yet. But do you fear that there may be price cuts across the system just to stay in the game a little more? Or do you think that the pie will grow enough for everyone to have, a fairly decent organic growth? Just trying to understand the dynamics now.
So as of now, it doesn't look like that, there will be intensification of price cuts happening, to sustain volumes. That's unlikely given the current situation, what we have seen so far. it seems that the market has taken this in its stride, and our sales have been relatively unaffected, I would say, even in the locations where they have launched already in a decent way. So therefore, I don't see this impacting us in a significant way at all.
Okay, you were telling my colleague that you saw about a 0.8, 0.9% gain in market share, right? So fair to assume that market share is somewhere around the 20-21% level right now for you?
So in over the 2 years, we gained last year about 0.4%, this year again about 0.4%. So we are around the 19.7, 19.8% level. And hopefully we will cross the 20% mark this year.
So anything else that you're doing in order to stay in the game, to combat competition, to make sure your market shares at these levels? Any strategy that you have for the next couple of years?
Yeah, so three things are there. One, we are relatively have a weaker presence in certain markets, especially in the urban centers, in the west and the south. So we are, putting up a separate effort on that direction. Growing our market share, our distribution reach first, and then trying to develop our sales in those locations. So that's the first thing which is going to happen, and where we have some interesting strategies around that, which will help us. The second is, of course, spending on branding and, strengthening our brands further. We increased our brand spends last year substantially. This year, too, we are going to increase further on that. Last year, the increase was to the tune of almost 40% in terms of spend increase, both digital and television. And this year also, there will be a growth on that. And we expect that, that will strengthen our brands, which is very important in the time of competition also to do that, and that should help us going forward.
So what was your overall branding and marketing spend as a percentage of sales in FY24, and how much will it go up in FY25?
So that, as I said, it increased by about 40 odd percentage from last year in terms of growth. I can't exactly remember what the percentage to sales was, and I expect that this growth will not be at that level. It will probably be more around 15% odd level this year as well.
Okay, and in terms of retail distribution touch points, do you have a number in mind?
Yes, we are going to add about 8,000 color bank printing machines. Last year we added about 7,100. This year we are going to add another 8,000. That's a substantial number, to be added, to our current numbers, which is about 40 odd thousand.
Okay, I wanted to understand also from the waterproofing and tile adhesives segment, what kind of opportunity do you see? I mean, how much do you think your business can grow in this space? What could the percentage contribution be, and what's the overall opportunity?
Massive opportunity there, Sonia. In fact, this is the fastest growing segment in our portfolio as well. It's growing well. It's in double digit of contribution almost, today. And we see this, segment growing at a very, very rapid pace going forward.
Okay, so what is your aim? I mean, how much would it, I'm sure it's very, very small right now, but how much do you think it can contribute to your overall business, say, over the next 3 to 5 years?
No, it isn't small. So it's already crossed 1,000 crores, so it's not small at all.
Okay.
And I see this growing at quite a rapid pace, so this will be one of the big growth drivers for us going forward.
Thank you, Mr. Roy, for joining in, and wish you all the very best. Need to get into a very short break. On the other side, we'll invite Saurabh Gupta of Dixon Technologies to talk about the Q4 earnings and the way forward. We'll also invite Umesh Chaudhary of Titagarh Rail Systems.
Welcome back. You basically have a situation where the market has given up gains. About 50% of the gains, morning opening gains, have been given back, and we're up about 45 points. So, the template from the last couple of days continues into today's session as well, although handover from overnight markets was much stronger than we've had lately. But we're, of course, on the earnings track, and the next company we are speaking with is Dixon Technologies. It's been a market darling, stocks at a new all-time high. Fourth quarter earnings missed expectations. Maybe expectations were perhaps a little too high, although outlook, of course, remains pretty upbeat. And there is a lot of interest. And there are so many tie-ups and so many reports of acquisitions, etc., which Dixon is going to undertake this conversation should be interesting. We have Saurabh Gupta, CFO at Dixon, now joining in to take some questions. Saurabh, good morning. Good to have you with us here as always. Thanks for your time. Prashant this side. First, let's just get the headline kind of numbers out of the way. Saurabh, so in FY24, you did just under 18,000 crores in top line. With all the tie-ups and acquisitions, etc., that you have done, could you guide us to what revenues in FY25 may look like?
So Prashant, I will not give any specific guidance, but I can give you some levers for that. So clearly, if you look at mobile is the largest opportunity for us and is the largest trigger for our growth. The financial year 23-24, we did a volumes of somewhere closer to 7 million smartphones and almost 38 million feature phones. Now, the 7 million smartphones has the potential to almost go to almost 20 to 30 million this financial year. And so we have added a lot of customers. We're looking to add some more brands in this category. And so that will be the largest trigger for our growth in this financial year. So please be assured the growth overall will be quite strong in this financial year.
The number that I have, and this, of course, the street is where it is at, the revenues could be about between 30 and 32,000 crores. Does that seem plausible?
Yeah, that seems possible, Prashant. And a large part of that 32,000 that you mentioned will come from mobiles as a category. Yeah.
And just to tie in the numbers before we dive into specifics, margins were about just under 4% in 24. Could you sort of tell us, will you be in the ballpark there? Is there room to improve this?
Yeah, so the positive drivers for us, Prashant, on the margin side would be, of course, the operating leverage kicking in. So in some of the verticals, it has kicked in. In some of the verticals, it will kick in, especially in the mobiles vertical, where we have made the investment. Secondly, I see that more backward integration we plan to do across verticals, and especially on the mobile side. We are looking into getting into the display for mobile smartphones, which will be really margin accretive and ROC accretive for us. And also, we are looking in some categories to get into designing as well. So those will be the positive drivers of margin. But however, mobile, which is slightly a lower margin business for us as compared to other businesses. So my sense is the margin profile would hover between sub 4%, 4.1, 4.2%, so somewhere between 3.9 to 4.2% kind of a range.
3.9 to 4.2%, right?
Yeah.
Okay, so 30 to 32,000 crores in revenues and margins between 3.9 to 4.2% for FY25. Got it.
Okay. Saurabh, hi, good morning. So you've helped us with a lot of numbers. You're saying 7 million smartphones currently. It could rise to about 28 to 30 million in FY25. You also earlier had an aspiration to scale up these volumes to about 40 to 45 million by FY26-27. Are you on track with that guidance as well?
Yeah, Sonia, we feel confident that next financial year we can take those volumes to around 40 odd million. So if you look at the total opportunity capacities for us, we've already created capacities of 45 million for smartphones and almost 40 million for feature phones, which is almost 50% of the opportunity pool which is available on the outsourcing market in India on mobile phones. So it is definitely, we have created the largest capacities in India, and now we're looking to get into more backward integration in this category.
Okay, got it. And, you started off with just Motorola as one of your key clients. Then you got into many other into tie-ups with many other players. But I understand there's one more large client that you're looking to close over the next 3 to 4 months. In terms of a timeline, are we on track? And what kind of value add do you think that client could bring on board?
Yeah, so we are absolutely in very deep discussions and active discussions, and we are very confident that we should be able to get them on board and start manufacturing for them in the next 4 to 5 months. So the numbers which I've given to you for this financial year on smartphone side factors into account that new customer acquisition as well.
Okay. What about the lighting and the consumer business, Saurabh? That's been weak. I think lighting was down nearly 25% in FY24. Even the growth has been restricted for the TV business. Are you expecting growth in FY25 for these two segments? And if yes, how much?
See, lighting has gone through a difficult times. There has been a big pricing erosion which has happened, pricing erosion to the extent of 30-35%. But now what we are doing is basically we're getting into some other categories apart from the indoor lighting category. We're getting into professional lights, which is street light solutions. We are also investing more into the ceiling lights. We're getting into the backward integration of for mechanicals as also for extrusion for battens. And we are also working on some export orders to US, and some of the exports to Middle East and Europe have already started. So my sense is it will take a couple of quarters for us, but I think so we should bounce back in the lighting business, and we should have a decent growth in this financial year. So I think so the worst is behind us as far as lighting is concerned. On the consumer electronics side, I would say it's a tough industry because we already have a 60-65% market share in this category, and the opportunity pool is not growing. So what we are doing as a company is that we are getting into more backward integration for mechanicals, getting into LED bars, getting into more and more of own design solutions, which is basically Google design solutions and also Kaizen-based solution under the partnership with Samsung. So more backward integration and designing will lead to more margin expansion. And so yeah, maybe another couple of quarters we should see better numbers in this category as well.
Okay, just one more question on margins. You've guided for margins of 3.9 to 4.2% for this year. And you are also planning a lot of margin accretive steps, whether it's display for mobile phones, design categories, backward integration. So this margin guidance is including all the steps that you're taking, or the benefit of backward integration and the margin accretive steps shows up only in FY26?
Yeah, so display for mobile phones is that we are just in the final stages of closing with a technology partner. We'll be creating a capacity of 25 million display modules. My sense it will take 5 to 6 months, so the results will only start reflecting in next financial year. So there can be a significant margin expansion, which can be possible on account of this in next financial year. But as of now, for this financial year, I'm not building too much of this backward integration of mobiles that we're planning.
Okay, so FY26 margins, sir, Saurabh, what would it look like?
There can be another 10 to 20 bits kind of an expansion, mainly on account of the backward integration and more operating leverage playing it.
Okay. And Saurabh, in smartphones, just wanted to confirm, you said FY25 smartphone units for you should be between 28 and 30 million units as compared to 7 in 24, right?
That's right. That's right.
Yeah, okay, got it. Now, just wanted to there are so many companies that you're working with, looking to work with, and new tie-ups, etc. So there was a report which, early April, which said that you're in discussions to buy a majority stake in the local manufacturing unit of China's Transsion Holdings. I know they make phones for brands like Techno, Infinix, etc. Could you confirm that?
Yeah. So we have done that acquisition. We are waiting the approval of Competition Commission of India, and hopefully we feel confident that we should get those approvals by next month or so, and we hope to consolidate and consummate the transaction starting July onwards.
Okay, so this is one of the three kind of acquisitions tie-ups that you've done, right? Transit, and this is all baked into the numbers that you gave for FY25.
Yeah. So that 28-30 million, I've already taken into account the 9 months impact of this acquisition as well. Yeah.
Okay. Could you give us a sense on IT hardware as well, Saurabh? What is the revenue potential here for Dixon over the next 1 or 2 years?
See, IT hardware is a large opportunity, Prashant. There's a $10 billion opportunity worth of IT hardware products which are imported into India. So there's a big import substitution opportunity, and government is very much committed to it. So they have brought about a PLI whereby and they've increased the budgetary outlay in that scheme, and also they put some kind of a restriction to encourage domestic manufacturing. So my sense is they've already signed contracts with Lenovo and Acer. Acer, we are already manufacturing For Lenovo, we start manufacturing by Q2 of this current fiscal. And we're also in discussion with more brands. But I think so those numbers are getting worked out. This year, it may not be a large number for us, but in coming years, it has the potential of becoming a decent revenue stream for us after mobiles. Yeah.
What is that decent number? Could it be just some sense? Say in FY26, for example.
It can be anywhere between 4 to 6,000 crores, Prashant, for us.
Okay, between 4 and 6,000 crores in FY26. This is IT hardware right now, and in terms of any other allied areas, like not allied actually, new areas like semiconductors, etc. Any plans for tie-ups? Are you thinking on those lines at all?
So one thing which we are looking at very seriously and we'll pursue it very aggressively is the PCB opportunity for industrials, electronics, or automotive space. We are working on some large RFQs. We are setting up a campus in Chennai. We're putting up a team. So clearly we see a lot of opportunity in that category. As far as semiconductors is concerned, we are not looking into it right now.
Okay. All right, fair enough. So PCB is for industrials is a large opportunity which you will pursue aggressively. Saurabh, we'll leave it there. Thank you very much for your time. Great speaking with you and good chat as always. So that's Dixon Tech with some perspective. The market had sold off, but is I think trying to make a comeback. We're up about 60 odd points, 22,258. Rima.
All right, let's move on and invite the next management on the show. That's Titagarh Rail Systems. Significant gains coming in on the stock. Strong Q4 margins for the company have expanded. Profit has seen a very strong growth. And it's the freight segment which has seen strong execution. Umesh Chaudhary, Vice Chairman, MD of Titagarh Rail Systems, is with us now to talk about the way forward. Umesh, morning, and thank you for joining in. First, if you could just give us some numbers. What's the order book and the split between passenger and freight segment? And when does passenger freight, passenger execution pick up?
The total order book we have as a company is about 28,000 crores, which includes our share of our joint ventures or consortium bids where we have won tenders, out of which it is approximately half and half, which is in the consortium stroke joint venture. Of course, when I'm talking about that, half is our share of the consortium, not the complete order in the consortium. And further drilling down the passenger and the freight in the 14,000 crore of direct orders that we have is again split half and half. So that's the overall order book. And as far as the execution is concerned, we completed Pune Metro. Almost all the trains are now supplied, and they are running well on the Pune tracks. And we are starting the Bangalore Metro execution from Q1 end or Q2 beginning of this financial year. So, this is the intervening period because, we had the first contract of Pune and then we were setting up the stainless steel line where there were some delays on account of the visa issues for the Chinese engineers. A lot of equipments actually came in from China, and that kind of delayed the project by a couple of months. But now we are on track and we'll be starting production in the matter of next few days itself.
So what are the targeted revenue bookings at the end of this year?
So this year is going to be, of course, much better than the previous year, but not going to be the optimum because, as I've always said, that the passenger business is a kind of a nascent stage, is at a nascent stage. We will have the Surat and Ahmedabad kick in this year. Vande Bharat will start from the next financial year. So the real potential of the passenger coach will be seen in FY26-27. So in both FY26, we will have a substantial jump, and FY27, there will be a further substantial jump of order execution that we have on hand.
Okay, 26 onwards, basically. Mr. Chaudhary, what is your ideal PV versus freight business mix?
The passenger business actually has a greater potential. So, if I really look at it, maybe 5 years down the line, I would say that passenger business should be probably 60-65% of our revenue.
Do you have any fresh orders in the passenger segment?
There are a number of tenders that are in the pipeline. There are several metro tenders, and then there will be additional Vande Bharat tenders. We've heard the Honorable Railway Minister speak about waiting list free railway system and 3,500 new Vande Bharats being added over the next 5-7 years. So there is a huge, I would say, traction in this segment. So many metros, there is the Mumbai metro, the 3 lines which are getting ready. Then there is Chennai, there are 2 lines. There is additional Delhi. So there will be a number of metro tenders that will be coming up that are already in public domain and that will come up in the coming months and years. So we don't see that order booking will be a challenge. The way we are structuring ourselves is we are creating a capacity to produce approximately 400 cars of metro per year and 400 cars of Vande Bharat per year. And we believe in the first phase. So we believe that there should be enough business in the market to be able to take up this capacity.
What's the target on monthly production in the freight segment?
So we, on an average, we did 900 wagons in the last quarter. We did 2,700 wagons. Of course, in March, we did more than 1,000 wagons. This year, our target is to get to about 1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. And we believe that that is, considering the overall market demand, that is the right sizing for us for the wagon. And then we will see the new freight corridors that have been announced by the government. As in when they come up, the demand goes up. Currently, we believe that the demand is about 30,000, 35,000 wagons a year. For that to produce about 10,500, 12,000 wagons by us is a fair market kind of share. And if we see on an overall basis, what we did last year was approximately 8,400 wagons, which is an average of 700 wagons. So from there, we would like to get to 950 to 1,000 wagons on an average this year.
Got that. Mr. Chaudhary, could you tell us what margins are you aiming for in both segments?
So I've always maintained that as far as the freight is concerned, the fair margin, I used to earlier guide at about 10%, but because of the operating leverage, I would say 11.5%, 12% is a fair margin for the freight business. They can vary from quarter to quarter based on how much private wagons we execute, how much railway wagon we execute, which type of wagon we execute. But on a blended basis over a few quarters, I would say 12% is 11.5% to 12% is a fair number to estimate for the EBITDA margins for the freight business. As far as passenger business is concerned, this is very important to understand because the margin improvement in this will happen on stages, in phases. So right now, of course, we don't have in fact, we have a disadvantage of operating leverage because we have created a large fixed cost. We just opened an engineering center in Bangalore this month itself. We have a joint venture engineering center in Hyderabad. We have a large engineering center in Calcutta. And all of this is going into the cost. We have very large setups that we have created, which is primarily going to get the benefit of that is going to come in quarters to come, wherein we are able to scale up our operations. So we believe that when we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year, we should be able to do 10% EBITDA margins approximately. And when we are integrated with propulsion, which should happen in FY 26, then our EBITDA margin should see an improvement and we should be targeting between 13 to 15% EBITDA margins.
So with all that you're aware of, revenue and margins, what could they be in terms of, FY 25, FY 26? What are we looking at in terms of annual growth?
So we don't give any kind of guidances. We don't give any forward-looking numbers. But, we have a large order book. We have a healthy order book, which we have to execute. We are ramping up on capacity. We have delivered, if you see, from 2,800 crore in FY23, we have done 3,850 crore in FY24. Our EBITDA is almost 450 crores in FY24, which is quite substantially higher from FY23. And that trend continues over the last 5-6 years. So if you look at the company in FY18, 19, around 18 or 19, we were at a top line of 300 crore. Now we are at a PAT of 300 crore.
Thank you, Mr. Chaudhary, for joining in. So that's Titagarh Rail. For the market, after opening with a gain of close to about 100 points, the gains have whittled down to 25 points. So there has been some profit booking set in the first 1 hour of trade. But Bharti Airtel continues to see buying, and that's moved up to the day's high, 2.5% up on Bharti Airtel. JP Morgan has upgraded the stock and put a target price of 1,500. So that's been the big winner. Mitesh is now back with us for some 10 a.m. calls. Mitesh, the profit booking which is set in the first hour, your thoughts on that, and what would your stock calls be?
So we've kind of come back from higher levels after a gap up opening. But as I said, I think till we actually start trading below 22, 200, 180 zone, I think I'll maintain a positive stance. So hold on to your long positions or even buy with this 50, 60 point kind of a stop. On the stock side, overall reality is having some kind of a breakout. So 1650 is the recommended stop. I would look at targets of 1765 here. And Nestle, I think, is one stock which is tapering on the negative side. So sell here with a stop at about 2470 for targets of 2400.
Okay, we'll do one thing. We'll take a quick break on that note. When we come back, we'll put focus on the commodity space. We'll also talk about some of the big stocks in focus this morning. Stay tuned.
Brought to you by Maruti Suzuki Strong Hybrid and APL Apollo, देश की बढ़ती ताकत.
सुन, इक्विटी में इन्वेस्ट कर, ग्रोथ का है चांस. सुन, डेट में है लो रिस्क, बात मेरी मान.
अरे बेटा सुन, गोल्ड सिर्फ गोल्ड, भैया ने भी यही किया.
सुन, अब तू कंफ्यूज मत कर यार. अरे मतलब सुन, सबकी कर मल्टी मतलब मल्टी एसेट एलोकेशन फंड्स, यानी 3-in-1 फंड. ये इक्विटी, डेट, गोल्ड तीनों में एक साथ इन्वेस्ट करें. म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है. योजना से जुड़े सभी दस्तावेज ध्यानपूर्वक पढ़ें.
लाइफ के गेम में प्लेयर्स तो बहुत सारे हैं, पर एक अच्छा प्लेयर वही है जो नई सोच के साथ पिच पर उतरता है. क्योंकि जब कंडीशन क्रिटिकल हो, नई सोच ही तो इलाज बन के आती है. रास्ते में कॉम्प्लिकेशंस मिल जाए तो हिम्मत का डोज यही तो दिलाती है. जब प्रॉब्लम्स के पहाड़ खड़े हो जाए तो सोल्यूशन बन के पार करवाती है. ऐसे ही तो नई सोच काम आती है. हारी हुई बाजी जिताती है, कामयाबी के नए फॉर्मूले बनाती है और जिंदगी जीने का एक नया तरीका सिखाती है. यही नई सोच हमारी जिंदगी में लाता है एमक्योर, ताकि हम सब अपनी लाइफ के मैन ऑफ द मैच बन सके. 40 से भी ज्यादा सालों से एमक्योर ने इनोवेट करने के साथ साथ करोड़ों लोगों को सपोर्ट, एम्पावर और एजुकेट किया है. बिकॉज व्हेन वी गो बियॉन्ड द क्योर, यू गो बियॉन्ड योर लिमिट्स.
बिल्डर से पूछेंगा, डीलर से पूछेंगा, साइड पे पूछेंगा, जाके साइड में पूछेंगा,
प्रेफर्ड यूनिट पूछेंगा.
When and why,
अरे कब तक पूछते रहोगे?
घर में इन्वेस्ट हो करना, 99 acres से ही पूछना.
Well, there's also lots happening in the commodity market. So Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, I'm tracking Monsoon this time because we have been hearing for the last couple of days updates coming in from IMD, so I'm going to analyze that. Well, in the latest information that IMD came out with in the previous evening, they said that the southwest monsoon onset over Kerala is likely on 31st of May. This is one day earlier than usually what we see as a date of 1st of June, but there's an error of ±4 days that IMD has put out with this day as well. Monsoon onset in parts of Bay of Bengal, Andaman and Nicobar is expected on 19th of May, and this is 2 days prior to what we usually see happen here as well. I want to take you through on what really have been the forecast from IMD and the actual monsoon that we've seen in last many years there. And when you look at the table that would come in, it only has been a couple of times that IMD has said that you could be looking at monsoon on 31st of May. One is this year and the last time was in 2021. But when you look at the actual onset of monsoon, it only has been once, and in the month of May that you have seen the monsoon come in. Apart from that, it always has been a month of June that the monsoon has come. And this time around, of course, with an error of -+4 days, the expectation is that it could perhaps be June before you see those monsoon showers here. Also, when you look at the prediction for this year in sense of monsoon, IMD has talked about above normal monsoon at 106%, while SkyMet talks about normal monsoon at 102%. I also want to take you through last few years on the kind of monsoon that we have seen in sense of final numbers there. So we're looking at 106% of a forecast. The last time you saw that kind of a monsoon was in 2022. Last year, remember, was an uneven, jittery and least monsoon that we've seen in the last 4 or 5 years at 94%. But the last couple, 2020 and 21 was great years, by the way, 109, 99 to 106%. So 20, 21, 22 were good years, 23 not so much, but 24 is going to be very important, because we did see previous monsoon not so great, and that did lead to commodity prices, agriculture production and prices both going on the higher side, and did lead to curbs coming from the government as well in sense of exports of various commodities like rice, wheat, onion and sugar in that sense also. India does receive 70% of its annual rainfall in the month of June and September. Remember, even as irrigation as a concept has been spreading in India, but the latest numbers from Ministry of Agriculture do show that it still is 51% of India that still depends, is a rain-fed really. Monsoon also is important this time because we are looking at very low reservoirs. The groundwater reservoir also has been declining, and there are important kharif crops that the government would be keeping an eye on in sense of production there. So you have rice, corn, cotton, sugarcane and soybean that you are looking at in sense of important kharif crops in the season that is going to start very soon there. The uneven 2023 monsoon did lead to various curbs there, and that is something that the street will look out for in sense of crops and ensuring that you don't see that kind of concerns. IMD also has come out with a couple of very important statements. One, that El Nino is weakening and La Nina will set in by August. So you would be looking at a stronger second half in sense of monsoon there. IMD also has said that it would be in the last week of May that they would come out with a geographical forecast as well on north, east, south and west on what kind of monsoon would these various reasons, would these areas see. So that is something that the street will keep an eye on.
Okay, thanks a lot for that. Well, plenty of stocks buzzing around right now. So let's take stock of some of them. Apollo Tyres is what I'm looking at this morning. There are a couple of upgrades that have come in post the numbers. So Nomura has upgraded Apollo Tyres to a neutral. They have a target price of 512 rupees on the stock. You have JP Morgan that has upgraded to an overweight. They've raised their target price to 555. Morgan Stanley has an equal weight with a target price of 472. Now, brokerages say that the company continues to demonstrate its commitment towards balance sheet deleveraging. The biggest focus area for them is a reduction of their debt. And even the current valuations, if you look at the way the stock is trading, it's trading at 6.5 times FY26 EV to EBITDA. And it does not look expensive compared to some of its peers. There is limited capex intensity now, and that will free up their cash flow. So that will continue to drive free cash flow positive, and hence multiple reasons why brokerages have upgraded Apollo Tyres, and the stock is in the green this morning. But Mangalam is joining in to tell us about Somani Ceramics and why he's watching that one. Mangalam.
Well, for Somani Ceramics, it's a good performance that has come in more so on the operational side. We've been speaking about how gas prices increasing have impacted the margins of all these tile makers, but now that is coming undone, just the way we are seeing decline in all the other raw material prices as well. So for them, an 8.5% jump in the company's overall revenue in the fourth quarter has led to a 30% jump in the EBITDA, margins improving from 9% all the way up to closer to 11%. And the reason for that is because power and fuel as a percentage of sales have come down from nearly 23% to about 19%. So that's a big decline that we've seen, and that's aided their margins going forward. And the other internals are also pretty strong. The fourth quarter volumes have picked up. It's about 7%, which is much higher than the previous 9 months that we've seen, because the entire full year volumes are close to around 5%. The company has alluded the margin improvement to stable input costs coupled with some of their efforts on cost optimization, and some of their joint ventures operating performance has also improved. So they believe that going forward, their margins will get only better. So they've guided for better results going forward, not only on the operational front, but post-monsoons pickup coming in from the demand standpoint as well. And the street likes that. The stock up nearly 15-16%.
Okay, thank you very much for that. Redington is another stock that we're looking at. It's down close to about 4% on the back of its numbers, disappointing numbers. Revenues are down 4.5% quarter-on-quarter, and on a year-on-year basis, revenue growth is just 2.7%. In fact, the revenue growth of the company has been coming down. About 4 quarters back, the revenue growth was over 20%, and this quarter, as you can see, it's steadily come down to 2.7%. Margins too have been under pressure. So quarter-on-quarter, margins are down from 2.2 to 2%, and significant fall on a year-on-year basis. For the full year, FY24, the company's ended with margins of close to about 2.1%, the lowest that we've seen in the last 3 years. Profits too have come under pressure. Now, this is a distributor for hardware and now even software. So they have a few cloud projects as well. But the company has been taking a cautious approach towards growth, and they're looking at balancing growth and profitability. So, last quarter they told us that, towards Africa, they're taking a cautious approach. They're reducing the solar business in Turkey due to the risk price volatility. So I think the company is now focused on balancing growth and profitability, and growth for the company has slowed down. That's Redington for you. We'll get into a break. On the other side, we'll get you some key takeaways from our exclusive conversation with Avenue Supermarts CEO Neville Noronha. Post that, Abneesh Roy of Nuvama Institutional Equities will join in to discuss those key takeaways and the outlook for the retail sector.
Brought to you by Maruti Suzuki Strong Hybrid and APL Apollo, देश की बढ़ती ताकत.
कल चाहे जो भी हो, मेरी फैमिली का फ्यूचर हमेशा सुरक्षित रहेगा. अच्छा लगता है ना जब आप किसी पे इस तरह भरोसा कर सकते हो.
ICICI Prudential Life Insurance, जिम्मेदारी लगे प्यारी.
लाइफ के गेम में प्लेयर्स तो बहुत सारे हैं, पर एक अच्छा प्लेयर वही है जो नई सोच के साथ पिच पर उतरता है. क्योंकि जब कंडीशन क्रिटिकल हो, नई सोच ही तो इलाज बन के आती है. रास्ते में कॉम्प्लिकेशंस मिल जाए तो हिम्मत का डोज यही तो दिलाती है. जब प्रॉब्लम्स के पहाड़ खड़े हो जाए तो सॉल्यूशन बन के पार करवाती है. ऐसे ही तो नई सोच काम आती है. हारी हुई बाजी जिताती है, कामयाबी के नए फॉर्मूले बनाती है और जिंदगी जीने का एक नया तरीका सिखाती है. यही नई सोच हमारी जिंदगी में लाता है एमक्योर, ताकि हम सब अपनी लाइफ के मैन ऑफ द मैच बन सके. 40 से भी ज्यादा सालों से एमक्योर ने इनोवेट करने के साथ साथ करोड़ों लोगों को सपोर्ट, एम्पावर और एजुकेट किया है. बिकॉज व्हेन वी गो बियॉन्ड द क्योर, यू गो बियॉन्ड योर लिमिट्स.
प्रेफर्ड यूनिट पूछेगा.
When and why, I don't know.
अरे कब तक पूछते रहोगे?
घर में इन्वेस्ट हो करना 99 acres से ही पूछना.
Go Digit General Insurance Limited, offering motor insurance, health insurance, travel insurance, property insurance, marine insurance, liability insurance, and other insurance products which the customers can customize to meet their needs. Launches an initial public offering of equity shares of face value of 10 rupees each through the book building process, with a price band of 258 rupees to 272 rupees per equity share. Bid offer opens on Wednesday, May 15 and closes on Friday, May 17, 2024. For risk factors and more details, please refer to the RHP available on the websites of SEBI, BRLM, stock exchanges and the company.
Welcome back to Bazaar Corporate Radar. It's still holding with gains, minor gains in the market, but very interesting conversation coming up. My colleague Mangalam had an exclusive chat with the Avenue Supermarts CEO Neville Noronha, someone who rarely speaks and someone whose voice needs to be heard more often. But now we have Mangalam standing by the wall with a few big takeaways from that conversation. Over to you, Mangalam.
Well, how I wish this was a video interview that we had, but you take what you get with the likes of Neville Noronha, rare voice, but extremely important as well, especially with the kind of success that DMart has seen in the retail space itself. The last conversation that we had was about 6 years ago. In the middle of that, there was a pandemic, a big surge that we saw in digital as well. So with all these things, the big obvious question was, what are the structural changes that have taken place in the modern retail world in the last 6 years? And to that, he had to say quick commerce could have had huge scale and digitally enabled micro enterprises which can reach small, tiny audiences at very low cost. And that has been the big takeaway over the last 6 years, the big structural change. One of the obvious questions also was that, the mix of DMart sales actually deteriorated largely because perhaps, there have been entries of a lot of these value retailers in the apparel space as well. To that, he said, yes, there is marginal impact and specific to a certain category such as apparel itself. And that's something that we've seen in the numbers of Zudio, etc. as well. But a lot on the street were also worried about why DMart isn't growing stores as fast as the street is expecting. On that, his assessment is that the external world is tracking how many more stores DMart is adding every year, whereas they worry about how well the stores being added are being actually managed, and that's the big dissonance. But having said that, they would like to add as many stores as possible, as fast as possible. But for that, is there any real estate available to do that? He said, well, that is a challenge, but digital commerce is definitely showing the way. It's quite clear what they cannot do fast, digital can. So that's something that they'll be speaking about. In fact, quick commerce, as per him, is a significantly smarter format for than digital marketplaces and a lot more relevant for India, which is known for leapfrogging beyond different things as well. And on competition and of course digital commerce, he says that digital commerce is indeed the next big challenge for all of us. And while they will be able to compete, the sudden disruption of general trade needs to be keenly watched. In fact, there will be significantly more digital plays before modern trade evolves and matures. And as a result of it, moats of every business will be slightly weaker than pre-digital times. Entry barriers have reduced for most retail businesses, and that could actually reduce profit pools as well. But talking about growth in the tier 2 and beyond, Bharat as we call, he said that this is a multi-decadal expansion opportunity. And lastly, asked him about what his key objectives for DMart are, and he said adding new stores and looking for moats in the e-commerce space, and growing that will remain the key focus for the company.
Okay, very, very interesting takeaways, not just for the DMart business, but overall for the sector, right? Thank you so much, Mangalam, for putting that into perspective for us. Abneesh Roy is joining in to talk about that. Abneesh, what really stood out for me is the fact that Neville talking about how quick commerce, I mean, it's not going unnoticed anywhere, right? Quick commerce can have huge scale, and digitally enabled micro enterprises can reach their small, tiny audiences at very low cost. So here is a large player talking about, large established player talking about the growth potential in quick commerce. What would your takeaway be from that? And from a listed space point of view, where do you see potential now?
Yeah, thanks. Definitely, DMart clearly is a gold standard in that space. And we have also seen in quick commerce clearly Zomato through the Blinkit and then Zepto and Swiggy, etc. do really well. For FMCG companies, for example, e-commerce is broadly 6 to 10% of the sales already, clearly taking share both from general trade and modern trade. And within quick commerce, within that, quick commerce is already around 30% of the e-commerce. So clearly growing much faster. Second is clearly now customer is also paying for the convenience. We have seen the ticket size, etc. increase. There is a more rational competition rather than just promotion. So it's a healthy mix of convenience and pricing. So yes, I would say that DMart Ready is a play by Avenue Supermart in that space, and they have been doing good work there. So there is a potential now because the competitive intensity from Zeptos of the world or from Blinkits is more rational. I think Avenue Supermart could also scale that up. But on the physical retailing, clearly Avenue Supermart has a huge runway still left. So I would say it will be still dominated by that. But yes, quick commerce could be an interesting option. E-commerce could be an interesting option long-term for all these players.
Okay, e-commerce could be an interesting option long-term. But what about the Avenue Supermart share price? Post this interview, I mean, I don't know if you went through the whole thing, but it seems like, very optimistic views coming in on the kind of opportunity size that this space has, given that we're now moving from a low-income to a middle-income economy in India. For a long-term investor, does it make sense to still buy into this stock?
Absolutely. This is a compounding machine. It went through its own challenges last 1-2 years because of very high competition. And there were investor concerns that the pace of the expansion in terms of the number of stores is also not meeting up. If you see first 3 quarters, number of stores were quite low. But in Q4, they added huge number of stores. So we would say that adding of stores is always bunched up it is generally slow in the first 3 quarters. That should not be the yardstick to measure DMart. DMart is extremely well-run company, and they have mastered that model of owning the real estate space, which helps them in passing on the discounts and best pricing to the customer because they don't have the rentals. So yes, I would say 2 states are dominating. So Maharashtra and Gujarat are still bulk of the stores, but in rest of the 26 states, some states they don't have a presence. In most of the other states, the runway is very high. So yes, it's a compounding machine. When we speak to the FMCG companies, they speak very highly. For example, Godrej Consumer, interesting data point. In the Raymond acquisition, they have done exceedingly well in DMart stores because both have worked with each other. So what we see is FMCG companies launching specific packs for DMart because of the kind of footfalls DMart is able to guarantee, plus definitely the pricing barrier which it is there. So yes, it's a good compounding machine. Valuations is always expensive, but I would say the worst is behind in terms of the margins, in terms of the store addition, and on the discounting from the quick commerce also more rational.
Absolutely. And quick commerce, right? I mean, we spoke about the potential there, and the management also talking about the huge growth in quick commerce. Just wanted your thoughts on how to approach a stock like Zomato now, because obviously we're seeing the kind of growth that Blinkit is delivering and everybody's talking about that. But and now with the Swiggy IPO as well all set to take place, do you think this pie is only going to grow further? And hence, apart from stocks like DMart, do you think stocks like Zomato continue to be a buy?
So I will not comment on Zomato specific because there is another analyst for this. But yes, 2-3 things clearly favoring the overall space if I see. One is, of course, now we are seeing players go to more cities, go for more rational discounting, which was not the case earlier when discounting was very high. Convenience fee was not there. Now a lot of convenience fee is there. And clearly the quick commerce players also expanding the portfolio of products. So a lot of things going right, and FMCG companies and a lot of the other categories also are very, very strongly focusing on this. Recently, we saw Titan, for example, sell Big Basket, and Titan had this tie-up of gold coins, etc. So categories are opening up. So yes, the space should do well. It's more rational competition, more number of cities getting added, and customer clearly is also now starting to pay for the convenience. So all the things are positive, I'd say.
Okay, all right. Abneesh, more questions, but we're out of time, so we'll have you back soon again for more. We'll take a quick commercial break. It's a wrap, actually, on this edition of Bazaar. The market actually is down 20 points. I mean, I think it looked like it's recovering and it was steadying, but no such luck. Take a look at what's going on. So at 10, the fall actually has started at about, 10:18 or so. So this fall is, 10 minutes old, not even 10 minutes old. But it's a sharp one. So the Nifty is now down in the red, 15 points. The Nifty Bank is down about 30, 40 points. And the mid and the small cap part of the market is doing much better. So this is a very much local problem. Market completely ignoring, of course, the positive handover from global markets. It was up and up there, but here there is nervousness, which is emerging once again, something we've seen over the last many days now. We'll wrap up. Thank you very much for staying with us from the Bazaar team. Thank you. And Chartbusters will pick up on the action in just a bit from now.
Indiabulls Housing Finance Limited announces a public issue of secured redeemable NCDs, offering coupon rate of up to 10.75% per annum. Tranche 6 issues open for subscription. To subscribe, log on to www.indiabullshomeloans.com. For risk factors, detailed disclaimer and more details, please refer to the shelf prospectus and Tranche 6 prospectus available on the websites of SEBI, stock exchanges, company and the lead managers.
हर घर में कुछ चीजें बेहद बेशकीमती होती हैं, इसलिए डोरसेट, एवरी डोर डिजर्व्स अ डोरसेट।
एक कलाकार तारीफ का ही तो भूखा होता है। जी नहीं, एक स्ट्रगलिंग कलाकार खाने का भी उतना ही भूखा होता है। दोस्तों ने खाने पीने का जिम्मा ना उठाया होता, हम कब के गांव लौट गए होते। नंदघर का भी ये सपना है, इस देश का हर बच्चा बिना खाए ना सोए, वो सही पोषण पाए। इसीलिए nandghar.org पे जाके इस मुहिम से जुड़िए और जब भी कोई बच्चा देखे तो उससे पूछिए, सुनो खाना खाया क्या?
हाँ खाया, आपने खाया?
अगर बचपन से पूछा खाना खाया,
देश का कल बनाया।
मैं बन जाता हूं। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं। पर उम्दापन की नई ऊंचाइयों को छूना चाहता